Hi friends, did you know that Nifty hasn't been a perpetual winner among various asset classes each year? There is one other asset class which has delivered higher returns than equities in some years. Any guesses? It is none other than gold that has time and again been the hero asset class in some years. Having gold as a dominant position in a multi-asset allocation fund is extremely beneficial because since 2000, not only has gold delivered a CAGR of 12.4%, but it has also helped protect downside risk, especially in a downtrending equity market when debt as an asset class also failed to perform. Samco is launching a multi-asset allocation fund with unique allocation to equity, gold, and debt asset classes. I am Nirali Bhansali, the fund manager for this fund. And let me explain to you what Samco's multi-asset allocation fund is all about. What is Samco Multi-Asset Allocation Fund? Samco Multi-Asset Allocation Fund is a unique fund with a dynamic rotate investment strategy. The fund has an ability to rotate predominantly into equity mode when equities are in a bull market, into gold mode when equities take a back seat, but gold is outperforming, and into debt/arbitrage mode when both equities and gold are falling. How does Samco multi-asset allocation funds rotate model work? The principal asset allocation of the fund shall be determined based on trends in equity markets and trends in prices of gold based on Samco's proprietary rotate model. Is gold a must in everyone's asset allocation today? Gold had delivered a return of 29% during global financial crisis, while Nifty returned a mere 4.8%. Even during COVID, Nifty 50 delivered negative returns, while gold was up almost 51%. There have been several other instances when gold or silver have been winners in a year compared to the Nifty benchmark. In fact, silver and gold beat Nifty in the last 1 and 3 years, as shown by the yellow and silver lines in the chart. Hence, the need for gold in everyone's portfolio is real, and the best way to invest in the bullion is none other than through multi-asset allocation funds. How will Samco's multi-asset allocation fund be unique? The industry average allocation to gold and other commodities was only merely 14%. Also, the industry follows a more or less static allocation to gold and other commodities, with exposure mostly hovering between 10 to 20%. However, Samco's unique dynamic rotate approach follows a dynamic approach to asset allocation, as is visible from the chart. Gold exposure can go up to almost 70% if market conditions warrant. Real-time and dynamic change in asset allocation is one of the most important features of Samco Multi-Asset Allocation Fund, as opposed to the general practice of a monthly or a quarterly rebalance. What is Samco Multi-Asset Allocation Model's return and risk profile? Samco's rotate approach has the potential to do better than only gold or only equity, and it is extremely efficient in protecting downside risk. When equities and gold are going through a period of downtrends and exhibiting deep drawdowns, Samco Multi-Assets Rotate strategy has the ability to transform into debt or arbitrage mode, which aims to protect downside and to have much lower drawdown than a 100% equity or a 100% gold portfolio, as can be seen from the blue line in the chart, which is Samco Multi-Assets Model Drawdown. Is taxation through multi-asset allocation funds better than buying individual assets? Most of the times, there could be equity taxation, but if gold remains a dominant position in the fund, then for the short term, it is slab rate, but for over 1 year, long term, there would be a 12.5% taxation, same as equity for the long term. Why should one invest in Samco Multi-Asset Allocation Fund? Apart from an exposure to various asset classes that this fund offers to investors in a tax-efficient way, the dominant position of up to 70% in gold, which is unique to the industry, will be a key differentiator, especially when gold exhibits inverse correlation to equity. Additionally, the dynamic flexibility of the fund allows for active rebalancing of its allocations in exceptional market conditions and protect investors from downside risk of the portfolio by implementing hedging strategies and allocating capital to debt or arbitrage instruments. Overall, this offers a solid proposition to investors to allocate money to the Samco Multi-Asset Allocation Fund. Our exit load is 10% of units can be redeemed without an exit load within 12 months of allotment. Any redemption in excess of such a limit in the first 12 months will incur a 1% exit load. No exit load if redeemed or switched out after 12 months from the date of allotment of units. The fund opens for subscription on December 4th and it is open till the 18th of December.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.